In spite of her strong support for the industry's best-selling battery-powered vehicle, Cathie Wood advises people not to sell their Tesla stocks. But why does she believe that investing in Tesla would be a grave mistake? She has some very good arguments. Let's hear more from her. However, before we do, please hit the like and subscribe buttons so that we can continue producing this kind of content. Now, let's get back to the video. Months of ominous imagery now that the stock is finally rising, many investors may be considering selling their Tesla shares. But one knowledgeable stock picker seems to believe the company has a very bright future and investors who get out could be missing out. Tesla has cautioned Tesla investors, encouraging them to stay on to their investments. Cathie Wood is well known for her strategy of selecting stocks by looking to the future. Her investing business, ARK Invest, holds shares in companies like Coinbase that have lately missed deadlines. DraftKings Roku Teladoc blocker, she would have purchased the dip at the time of the acquisition with her money, where her math was, thanks to Health Tesla and Zoom Video. For the first time since the company's recent sell-off following the stock's all-time high, the corporation had purchased Tesla shares after falling. Wood paid an estimated $27.76 million for the shares after the Tesla Incorporated bull took advantage of a decline in the price of the electric car stock following its results and jumped into the stock. She has noted that conventional investment strategies typically underpriced revolutionary new developments. Even though not everyone can withstand the star's extreme volatility, statistics show that when a stock fell by 9% or more over the course of 5 days, it gained 62% or more over the following. While some people may find the emotional and financial roller coaster of the market to be worth it, others may decide that the risk is not worth taking. And most financial advisors advise diversification as the bull market continues to break new ground. Tesla Jason DeViaut took to social media to express his happiness at his unanticipated Tesla fortune. The Ball claims that he currently has 14,850 Tesla shares, which he purchased in 2013 for $7.50 a share at an average cost of $58. He believes that his portfolio is currently worth $1 million. The bull informed Ram that, given that the company is just getting started, it is unlikely that we will see another Tesla in the upcoming years. Wood completely agrees with them and has even stated that this is just the beginning for Tesla. According to data and Wood's comments in an interview, consumer preferences have shifted in favor of electric vehicles. According to Bloomberg New Energy Finance, battery electric and plug-in hybrid cars combined accounted for 7.2% of global car sales in the first half of 2021, up from 2.6% in 2019 and 4.3% in 2020. Sales of electric vehicles were predicted to rise, with GM, Ford, and other automakers selling zero-emission vehicles by 2040. We're starting to feel that if Tesla is the first to succeed in autonomous vehicles in the United States, Tesla will not only take the largest percentage of the electric vehicle industry, but we believe it may grab 20 to 25% of the whole auto market in 5 years. She believes that Tesla's autonomous driving efforts have a 50% chance of succeeding, and that this is the most critical factor in reaching her $3,000 price target for Tesla stock by 2025. This was her response when asked about the potential impact of Tesla's success in the U.S. autonomous vehicle market. In light of the current state of the economy, she also believes that autonomous vehicles operating in autonomous taxi networks will prioritize the vehicle's capability for transportation over other criteria in the future. This prediction can be seen as somewhat realistic when you take into account Wood cites Tesla's rate of innovation, like Apple achieved in the smartphone business before Nokia. Tesla is the market leader in electric vehicles and will soon capture the lion's share of industry sales. Intel and Motorola joint experts say that the advent of AI-assisted driving represents a fundamental shift in how we view automobiles and the driving experience, which is why the value of Tesla shares is only half what it should be. The fray would notice that while Intel in Qualcomm went after the volume players, Apple developed its chip and as a result still controls the majority of earnings in the cell phone market. What happened to Tesla now, in our judgment, is that its capitalization will expand. This seems like a fair analogy. If other specialists in the business hold the same opinion, the share price might triple in the next years. Even though Tesla is only a little over 10 years old, it has become the industry leader, Since the company is paving the way for a more sustainable future, it has also drawn a significant number of investors eager to invest in its shares in the hopes of becoming wealthy, according to Wood. These investors, she believes, should look elsewhere because the company has a bright future ahead of them, so she believes it would be premature to sell now. Not only does the company's use of wood speak well of it, analysts have noted that after visiting the Tesla factory, bullish gold prices and an increase in stock price have led many to predict that Tesla could soon rank among the most profitable automakers in the world. According to the coin price estimate, Tesla stock is expected to be $2.5 million, or 287% of its current sales. Gigafactory Chowdhury kept his 1,500 price and overweight rating. Aim for this footwear well since it shows the company's intentions for further growth or carrying out the plan. Analysts at Deloitte are similarly upbeat about the brand's future, stating that global EV production is expected to grow at a compound annual growth rate of 29% over the next 10 years. With Tesla already controlling a sizable portion of the market, the company is expected to expand. Air Analysis projects that global sales of electric cars will increase from 2.5 to 11.2 million in 2025, and then to 31.1 million by 2030. Although Tesla's stock may reach $29.48 in the upcoming year, Wallet Investors' algorithm forecasts fast growth for the company. And this stock is categorized as an outstanding long-term one-year investment with a price target of $12.70. Ultimately, we think the question of whether to sell your Tesla stock comes down to principle. If you no longer believe in the brand and selling now would result in a profit, then by all means do so. However, if you still believe in Tesla, you would lose money. In our opinion, you should hold on to your stock and make sure you're not. This concludes our video. Please leave a like if you find it helpful. Whether this pattern continues will depend on the overall state of the market and Tesla's Q4 earnings call, which is set for January 24. Remarkably, this earnings call would be the perfect time for Tesla to disclose Elon Musk's new remuneration plan, which would encourage investor confidence and provide Elon a powerful motivation to continue leading the firm. Given the ongoing legal challenges, Tesla would be in grave risk if he departed. Adverse media attention and potential repercussions for stock performance. For the elderly and those with impairments who are unable to drive by improving mobility for these populations, Tesla potential to be a major force in advancing independence and social inclusion. Imagine how Tesla's self-driving technology and energy sector innovations could combine to create a new benchmark for environmentally friendly transportation. Can Tesla continue to dominate the market outside of the automotive sector in the face of growing competition and shifting consumer preferences? How will Tesla's innovative projects? If you're new to our channel, consider subscribing to Wall Street Games. We appreciate your time and we'll see you in our upcoming foreign videos. Do you agree with Cathie Wood that putting all your eggs in one basket is risky? Will you be selling or holding your Tesla shares to diversify your portfolio and lessen the impact of any single industry?